recording. If you buy a call, stock goes up, and you're thinking, oh, this is where I would likely take some off the table. Do the same with your spread. Take some off. It's got profit. It's that trade is built to try to mitigate the potential dangers of high volatility, right? When you have high volatility, now it controls your risk. You can manage the costs of the trade through the spread and things like that. But at the end of the day, it's a derivative. When you buy a call, you're still trading the stock, so the stock is still going to give you mostly of if I'm right or wrong. Now the spread could have other elements, right? If I get to like 75-80% of the spread's max gain, well, there's not much left at that point. So I'm definitely going to, that's a part for me where I'm like, I'll take a good chunk of it, maybe all of it. I might just be like, that's what I'm looking to get, 80% of this thing. Because it takes a lot longer to get that last little bit. To get that last little bit, you've got to carry it all the way to expiration. So unless you specifically planned it to, I'll do 10-day spreads, right? You plan it so that it expires around the time that you think it would take to get to your target, right? 10 days. Oh, okay. And that might match up. So then there might be other elements to it, but I would always start with that priority. The stock is first. Just like the stock tells us if we're right or wrong with the calls, let the stock tell you if you're right or wrong. So you're kind of planning that trade. So in that regard, the priority is still, what's my plan for this trade? Where do I take some off the table? Where do I start tightening a stop of? Now, you might not set a hard stop, though you can. It's just, there's more contracts, so there's more potential slippage when you say, and that's the other thing is you tend to slow down the Greeks, right? So you slow down the delta. It moves a little slower, but it also goes slower against you. So it's just, it has a little more stability for possibly, making manual exits, right? You think it doesn't whips up. I don't know. Does that make sense? But yeah, think of it as it's a trade, and what are you trading? You're trading the underlying, and use that to do most of the guide, and then think of maybe the specific elements that differentiate the spread from the call. And with that, welcome to Options Income Launchpad. Sunday Market Insights. I'm Scott. As always, what we do is for education, illustrative purposes only. Nothing is considered recommendation to buy or sell. We're not brokers or advisors. Decisions made should always be done at your own risk. Take a minute to read the rest if you ever want to. What are we going to do today? Market posture. I'm excited because I spent a little time just for fun building a little model of our market posture in let me see. Posture. Okay, let me see. I've got it ready. It'll be very interesting to see if we can incorporate this. So I have to go faster than normal because I have to take pictures and then actually it doesn't take that long. This should be okay. All right. Market posture with a new AI added component. How about that? Look at us. Using AI to help us forecast the market. We're ahead of the game. Fancy indeed, sir. Sector searching. We'll see. I mean, look, I agree. There was some good signs, and technology continues to lead the way. Watch list maintenance. We'll go through, obviously, our watch list. We'll create our opportunity list. We'll delete any stocks that we think just are not holding up. And today, it's a great day. Today, we start the final trading plan loop of 2025. Can you even believe it? What does that mean? It means that there are 8 sections in our trading plan. And I believe I gave like a cushion in there for holidays and stuff. So there's more than 8 weeks left in the year, obviously. But we basically have one time with holidays to get one last. We've talked about this before if you were here last year. We don't like to make like, oh, here's my New Year's resolution. We actually like to say, hey, let's get our new plan ready to start the year. So that on week 1, you just went through the loop and you strengthened every aspect of your plan. Got strengthened. Boom, ready to go into 2026. That's what we're doing. Everybody's doing it. You might not have realized it, but you are. Okay, so what does that mean? Section 1. Let's get started. Okay. Of course it did. I tell you guys, it plays tricks on me every Sunday. Thinkorswim. I'll just be using it and like pulling up charts. It's working, and then I start talking to you guys, and it just shuts it down every time. Give me 1 second to just get this going here. Oh, there we go. That disappeared. My ugly desktop here. Let's see. Let's get Thinkorswim started back up. Whoops. Okay. In the meantime, we're going to work our way backwards. And we're going to start here. We're just going to dive right in. Let me make sure we're where we need to be. I don't think that's all the way over. Let's refresh this. There we go. Does that look right? Okay. Okay. And here we go. Last week, 3.75. Steven says he's feeling a little bit bullish. Oh. Okay, that's in progress. Oi. Always a little slow. Okay. Steven. Yeah. That was a good one. That was a good one. What was I about to say? Oh, this is coming up, so that's good at least. That's good. I actually want to go maybe in the order. Here's what I was thinking today. Let's see what the model scores just quickly while we talk about it. This is just a real-time experiment among friends. Hold on a second. I need to get my charts. There we go. Open. No. 1, 2, 3. Okay. All right, we're getting there, you guys. Let's get this to SPY. We'll go weekly. I'm going to take a quick screen print of this. And on the other side, let me move this over here. Hold on one. Okay, here we go. Let me know if you have any questions here. But I have AI market posture. So I've already built this. Here we go. I'm going to paste just the trending chart. Boom. This week's chart to analyze. Okay. While that happens, my thought, of course, I've been talking about this. We're at a 1.25. If it got to the top of this, I've kept saying if it gets all the way up, I'll put mine at a 1.5. And we still haven't gotten there. I mean, it looks good. It's holding the 1.25. Has anybody seen enough? But I will say this: it is closer to going higher than there's any danger of it dropping from a 1.25 to a 1. Give me your thoughts. No change for Steve C. So yeah, I'm on the no change, and if anything, it's closer to positive than not. Okay, let's go see what AI scored it as. Here's your long-term analysis. Score 1.25 unchanged. Rationale continues to climb in the same channel. Structure still shows clear higher highs and lows. Continuity bullish, but not steep enough to merit an upgrade toward 1.5. Continuity reflects sustained institutional strength without notable momentum expansion. That's a good analysis right there, right? I mean, that's pretty good. So AI agrees, 1.25. All right. Let's go to... Let me move this back. We'll next end up in the short-term analysis. I've got that one ready next. Let's go see what it looks like. Tell me if this is interesting or not interesting. As far as adding a component. Steve C says yes. Okay. So here's what I did for anyone who's curious. I took the videos from we have 6 videos, if you didn't know. They're like 7 to 12 minutes, kind of teaching the analysis that we're using here. And then I transcribed them and I put them into AI, and we talked a little bit about like, this is what we're doing here, blah, blah, blah. And then here's what we look at. And then this is now these sub conversations are basically allow me to now just take a picture, put it in, and it'll help us see if we see it. Tony says very interesting. All right. Now this one is interesting to me because I thought this was kind of a breakout. Like, I might want to throw a quarter of a point. towards the short-term trend to reward it. Anybody else have that thought? Not necessarily that you did, or were you thinking, "Ooh, hey, that's a breakout maybe from a okay, see? Now, let me take a quick picture of it. And I'm going to move it over here. This is ChatGPT. That is the model. ChatGPT. So it is I'm only loading the price chart. That's our rule, right? I'm not loading volume or stochastics or anything else. I'm only so of this image here. When I come over here, I'll show you. Let me bring it over. Super interested. So this one is I'm now in short term. So I'm going to paste this chart. That's all it is. And say next short term chart to analyze. Bam. Okay. We'll give that a second to do its thing. Let the computer noises are happening in the background, and it's calculating. I don't know. No, we're not here yet. Let me go back. And yeah, I'm thinking that does deserve. It made a higher high. We give it sometimes increments of reward and demerit style scoring. Sounds like a couple of people already did. The lights are they're flashing right now like, ooh, it's really starting to speed up. Ooh, okay. So last week we said 1.25. Last week I was a 1, and it says now I should be a 1.25. The short term has regained moderate strength. Price rebounded cleanly. The move back toward prior highs suggests renewed buyer control. Not a decisive breakout. Up from 1 last week. Confirmation above 678 to 680 next week would justify a stronger bullish score. Okay, so what do y'all think? I think it's a confirmation. The machine says we raise it to 1.25. I tell you, I'm ready to surrender to our AI overlords at any time. 1.25. Woo, okay, so volume is next. Gotta tell you, I'm having a lot of fun with this morning. It's kind of interesting. So let's see. We go here and we go find the volume analysis conversation. We did some calibration, you can see, in our back and forth to get it to understand what it's supposed to do. And now we can bring it down to 1 month daily, but let's concentrate this a little bit more. I'm going to change my time to 7 days and take a quick screen print, and then, okay, let's talk about it. So all of that volume to the left has dropped off. We have one tie, so it doesn't really matter. That doesn't impact much anyway. So we're really focused here. And this last week we had average, but not more, on a red day. And we had average, but not more, on a white day, a good day. But overall, we're really scoring this right here. That's what I think. Let me run this. This time I'm gonna give it obviously price and volume, but no stochastics, nothing like that. So let's bring it back up. It's such an interesting experiment. Next chart to analyze. I'm not even gonna put the date in here. 10, 26, 25 for reference. Okay. What did anyone do? I think we're going to leave it the same. It's oriented a little more towards the sellers, which in this situation for us means we score it a tie. If it was actually tied, we would score it a little more towards the buyers. That's how this analysis works. Let's see if the AI model picked up on that. Oh, well, Stephen and the AI model agree. Volume analysis, week of 10/26, score 0.25 rationale. The newest data shows one fresh buy day, one sell, and one tie. I see two sells. The earlier cluster of heavy selling has rolled off, leaving buyers with a slight edge. Tie goes to the buyer's rule. No evidence of strong conviction either way, but the neutrality has inched marginally bullish. Oh, well, that's a fair analysis. That's an interesting perspective. Luckily, I have two. So far, I have AI scoring down here now. So it was a 1.25 and a 1.25. Whoops. And is 0.25 here. I'm actually sticking with my guns. I'm going to leave it at a 0. Steven and our market prognosticator have edged it up. Are you edging it up at 0.25 or keeping it at a 0.25, Steven? AI was we were at a 0. But is up, reflecting a small improvement in balance as more stale sell volume dropped out. Still low energy tape. A return of heavier selling next week could likely slip it back to 0 or minus 0.25. Okay. Well, there you go. Love it. I'm gonna leave it. I'm not gonna try to convince it otherwise. I'm gonna let it have its score, and then next week, if it needs to adjust, it'll adjust. I feel like we've calibrated already. So Steven and AI agree. Interesting. How you feeling about that, Steven? You and the computer? Let's go back. This one takes a little longer. We're gonna do major market analysis. This requires all 4 charts. It was a little uncertain what to do with the 22. So I'm curious what this one does, and this one might need recalibration at some point. But I'll leave it for a little while and see how it does. Okay. Moving on. I feel like actually this keeps me moving pretty quickly. Hopefully, I don't yap so much. Okay. So let's just kind of walk through this one at a time. It establishes itself. Okay. I mean, it looks like normal, right? Even the small caps are fighting to kind of move into a leading position, even on this time frame here. So let me give it. That's one chart. We'll move to 133 and print screen. Great rebound. I agree. Okay. And you can see here Russell in second position, NASDAQ in first position, Dow in lagging position. Classic bull lineup. Everything about this looks pretty solid. Let's go put this in to the model. Shabingo. Let's drop it down to 66 days. And the Russells, like Steven said, it's a great rebound. It's back in a leading position. And technology's in the second leading position. The Dow is still lagging. Let me get a picture of this. Let me go ahead and put it in. Let me grab a quick snapshot. Let's put it in. And let's go down to the 22-day. Pretty much close to parity, but even within this, you can see the same thing. Slight lead with Russell. NASDAQ in a second leading position. Fine. We even talked about a potential trade on IWM, if I'm not mistaken. We'll look at that. And the Dow still slightly lagging. Let me pop this in. And so for me, we're a 1, and this feels strong. It feels like it's still a 1. Anybody change? Anybody drop? I will see what happens here. Here are this week's charts to analyze. 10, 26, 25 for reference. Calculating. So I definitely am still going to be a 1. Strong is looking good. Strongest part of the analysis has been for 6 weeks. Interesting. That's unique. I cannot recall a time. It's what's interesting to me is when you look at it this way, you really start to reflect on the individual components and not just like, whoa, what's my final score? Blah blah. Right? We're very, I think, thoughtful about what each individual one means. And I'm saying, like, I've never remember a time where the major market lineup was the strongest part of what was going on. It's like, wow, it's very interesting. Very interesting when compared to the sectors. I agree. 100%. It's like, wow, okay. Okay, let's see what AI said. And we'll move on. Score 0.75. It remains one of the stronger, holding near. However, the NASDAQ regaining a slight edge. I think I need to recalibrate it here. Because it's not really, it almost feels like it's marking that as, I'm going to mark that, but I am going to recalibrate that one for next week. Because I think it actually is underscoring what does the NASDAQ leading mean. It doesn't, those two leading together is as bullish as one or the other. Okay. You need recalibration. We'll come back to you this week, buddy. Bad AI. Let's go to sectors. No, that's not. Is this, sector rotation. There we go. Sector rotation. Okay. Sector rotation. Major market needs a tweak. So let's put let's mark this. Yellow, you need a talking to, buddy. Sector rotation. Where's my charts? There we go. Let's restart you. Okay. What do we see? Technology moving back strongly into that leading position. That looks great. Am I right? Sorry, I'm taking a quick little snapshot of that. Utilities is still there, still looks pretty strong. We have communication services up there, we have industrials up there. So this looks okay. If this were to hold up, but it doesn't, that's the problem. Right? So let me put the first one in. Let's go to 133 and take a quick picture, move it over here. Okay, so technology, obviously the dominant. Am I all the way over? The dominant. Then we have these two trying to hold up. They're there with the S&P, but not like they're leading other things, but they're actually just in line with the market itself. So it's not very strong in this regard. But there's also not any defensiveness. Even to here in the next position is industrials, then utilities, and then everything else is down at the bottom. But that's at 133. So there's a lot of shifting going on in here. We drop it to 66, and good news is technology has regained a position at the top. Pen screen. I'm very curious to see if anyone changed theirs. If anything, I was a 0. I think if anything, I'm leaning. That's interesting. Steven was a 0.5, and he's dropping to a 0.25, and I'm actually a 0, thinking maybe I go back to a 0.25. I see a lot of technology back, like it's popping back up. Even right here. Yeah, so let's I see technology, still utilities, which is a little bit of a mix. Healthcare's there, but it's like discretion. I don't know. I think it could be a 0. It could be a 0.25 if anything. So if anything, I might go with ChatGPT on this one. Let me paste this one in here. I actually give it all 4 at once. So let's drop on down to the 22. The gap detect on the 200. I mean, the 200 really, the 200 day, you mean, John, right? Like the 200 day for me is always just like, hey, what is the foundation? Here's where the crutch stage of AI dependence begins. Press is a little unconvinced about this analysis. I'm just fascinated by it. But here's the thing. I'm already like, oh, AI, you need a little help here. But I'm wondering if it gets to a point where it's like, okay, I'm hopeful that at some point it tells me you missed something, right? That's what I'm hoping. Right now, I feel like it's a little bit still trying to understand the process. I'm super curious how it does on this one. It's a more subtle analysis, requires a little bit more. Here are the new charts for this week to analyze 10, 26, 25 for reference. Go. All right. So I feel like I could keep it a 0. I could raise it to a 0.25. I'm on the fence. Let me go back to the On the fence here, this is a little more concerning. I do have utilities and healthcare at the top, but I do have technology trying to make a move. I don't know. I'm a little leaning to the 0.25 just to give technology its proper respect for its ability to lead as a solo sector. Let's go see. Sector rotation score 0. 200, 133 continue to show broadly bullish structure. We said that. However, the 66, they now utilities and healthcare co-lead along technology, discretionary. Comm services have clearly softened. This marks a notable broadening into defensive sectors, suggesting reduced institutional appetite for risk. Press, it's already given me some perspective, I think, here. 22-day chart adds mild confirmation. Defensive remain elevated. Reflect. Yeah. I think I had a little bit of I'd like to be more bullish bias. And the model's like, no, Scott, no. This time I'm going to mark AI first, and I am going to be right there alongside with it, staying at a 0. Okay, Steven says as long as tech is leading, he's going to keep it. That's a fair line to hold. I have no problem with that. Okay, lastly. Does this feel slower? Or does it feel like we're actually going about the same pace we normally do? I feel like we're maintaining pace pretty good. But then again, I could be biased. Let's go to the VIX. The VIX is a tough thing right now to score. I don't know if it made it all the way down as far as it needed to, but I'm thinking it needs to get maybe a quarter point back. Possibly. Anybody? Let's get the VIX. Same thing. I'm not putting any extra analysis. Just the VIX chart. No stochastics. It does have, obviously, the moving average line. But let's go here. Let's go back to the VIX analysis. We scored it identically on the first. This week's chart. On the first time after it was instructed. Analyze 10, 26, 25 for reference. Go. We don't want to know what you have to say yet, though. Let's talk about it first. That's how we avoid the crutch right there, press. We talk about it first. And then we're like, okay, now what does it say? It's a tool. We control it until at a certain time when that reverses. I'm lobbying for a leadership position from within the human ranks. Okay. 0.5 is where I was. It had fallen off pretty hard, but we talked about this candle and having reversal significance, and that it could just kind of keep dropping and pushing, and the market could just keep pushing higher. We said all this. We said this. You remember. And here it has. It's pushed all the way back down to this. So if you're thinking to yourself, this was the last low. I feel like this is the last low I scored, but I have no problem being like, you know what? This was actually, it went up, down, and then popped off of this. You can see it clearly rolled here. So, but boy, we got a lot back. So I'm leaning, that's where I'm leaning, Steven. I'm a 0.5 and I'm leaning 0.25 increase. Is that an increase or is that where you were last week? I think it's done enough to get all the way back down from that high point to say, hey, let's give it a quarter point back. Can we look at April? You want me to open up to a year real quickly? No problem. No problem. Bam. Yeah, so you can see April. I mean, we got here and recovered. We got here, but this one escalated. So this is kind of a, one of those secondary high zones, but not a abrupt stampede type panic like that one was. But we've gotten a good amount back. So okay, I'm very curious to go see. There you go. VIX analysis, week of 10/26, score 0.75. The VIX continued its retracement, closing near 16.4, sitting just below the 50. The prior surge above 28 has fully unwound. Sequence of lower highs and lows indicating normalization. Okay. The VIX is approaching the mid-range, a calm zone. A sustained move below 15 next week would justify a full return to 1. Yeah, I mean, that's good analysis, though. Do you guys agree? I 100% agree with that. That's right. We talked about 15. That's right. Okay, so this was where we were, 15.30. This low here, 15 is just kind of in this zone. If it pulls all the way back, it's a 1. 100%, dude. That's just press. You see it. You see the beauty of this model. We're both raising our score to 0.75. Bam, and there it is. Okay. So we got to the same place. Model is working. Okay, all right. The model is a 4.25. This is not an actual score here. This is me, like, what was it? What was I when we first ran the score, and then we calibrated to get approximately to the same area. But I'm like, I don't want to change anything unless it fundamentally misses something. I think it actually did here on major market. I think it would actually be a 1. So if anybody's a 4.5 with a 1 here, then I think you and ChatGPT are on the same place. I'm a 4.25, which is good. We got a half a point back. That's a nice stabilizing number. Certainly, we would like to see the government. We can only sustain that for so long. I think we've had pretty good corporate earnings overall. And so there you go. Steve C, 4.25. Stephen D, where did you end up? Out of curiosity. And so there it is. Week 1, integrating a confirmation AI model. 4.5 for Bob Rowland. Bob Rowland is right there with ChatGPT. 5. There you go. Stephen is the most bullish. He is ready for the Santa rally. He's feeling it. He's listening to some Christmas carols in his car when no one else knows. It shouldn't be ashamed. There's nothing wrong with listening to Christmas carols in October. Nothing. Don't let anybody convince you otherwise. All right. Let's go look at the watch list and get our list going. I thought that was actually pretty good and interesting. The next 2.5 months will be the most bullish, Steven says. Okay. Apple. I mean, Apple has been, you can see it. It looks like it's trying to turn up out of almost like this flag type pattern. You've got a few days. Apple reports earnings this week on Thursday. So I don't know. Maybe there's some momentum trades in there, a day trade or a momentum trade where it might be like a 4 to 6 hour trade, something like that. I'm going to still put Apple on the list because it is bullish. It does look pretty good. ABBV could be on a hiccup, but we're not really looking for could be hiccups. Earnings are this week as well, Friday. So there's still a slew of earnings. We still have one more week to go in our current earnings window. Archer Daniels, it's a bit choppy. You're not really looking for that much chop in a defensive stock. Amazon, it's moving bullishly, which is good, but not enough. I would wait for the next pullback. You've got earnings this week on Thursday. ANET is one that we've actually been talking about. Talked about a setup on that one. It was not an alert, but we definitely discussed this. It's now kind of in this zone. So maybe there's some momentum left here. And the same thing, you look to pick it up intraday, or you look to, it can have some big moves intraday, things like that. I'm going to put ANET on my list. APH. It's got those big old candles, but the trend is good. If it pulls back, I think maybe something there. AVGO. I don't know. I mean, it has sort of regained its trend. Let's put it on. AXP is definitely on the list, but it needs to pull back. Not tradable yet. Same with BAC. I like BAC. BAC looks like it could be trying to move. If you thought about it on Friday, it's hard. None of us love pulling the trigger on Friday. Who took a trade on Friday? Anybody? I see it, Steven. Here comes Santa Claus. Here comes Santa Claus. Right down some. Yeah. Santa rally. It doesn't come if you don't believe. That's how Santa works. You guys know that. You got to believe. Okay, I do know. Has anyone, Bob Roland, directly to you, has anyone like emailed you back to confirm like that they're looking into it? That's what I've hoped. No. Okay. All right. Well, then I will make sure they confirm it to me. Bob Roland. Oh, let me get a card. Bob Roland. You're on a note card on my desk. I know you're like, great, a note card. That means something. TSM. I think TSM looked good on Friday as well, which is helpful. I think chip leaders. It's easy. It can be. We can expect some more bullishness. Is what I'm looking for. So BAC is on my list. Citi. You can see Citi. I was like, ooh, did Citi just bust out of its, hiccup / mini consolidation? I like Citi. I'm looking at Citi. Caterpillar. I mean, we would all be thinking about Caterpillar, but you don't have long. It's Wednesday before market. So you have basically 2 days. If you think you could catch some kind of day trade action, if you're a day trader, or possibly 2 days, but you just don't have long before the earnings on that one. CCJ looks great. Already was taken as an alert. Looking for more. Looking to see if this thing can get some running into it and get on up. Get on up. CLS still looks bullish, but it's got earnings on 10/27. That's tomorrow. Tomorrow after market. So whatever happens tomorrow, then it's earnings. COF. What do you guys think? Do we add it? I like AXP better, but this definitely broke up. If it pulls back, that's valuable, or no, it's still kind of overall sideways. I'm kind of leaning towards just AXP. Add COF, yay or nay? No. That's 2. No. Done. Once we get to 3. Coinbase. We got earnings. I mean, it took a heavy turn, but that was a kind of a funky below 50-day hiccup. I don't know. We'll watch it and see. Cisco, I think, still looks good. A nice solid tech play. If it pulls back, it gives us a bounce off that 50. I'm a no on Delta. I'm a no on DoorDash now that it's sunk that far. Now I think it's in consolidation. Diamonds look pretty good. DocuSign, oof. Every time it comes up, it just struggles. It can't get back up. I don't know. Ford, woo. Ford on earnings, big move up. I think we'll spectate for a little while. GE, I would still say GE has some bullishness to it for industrials. Has a chance to start moving into a stronger position. Gold, I think gold. I'm going to hold off on these metals. I feel like they're a little toppy. I feel like they had that gap down, one of the largest sell-offs. I feel like they got really overextended. Be careful in the metals. Silver as well. Steven's looking for silver, but he's looking at a level like down here. Give it all back. Which means, there could be some put opportunities to trade the downside if you think it's going to make those big drops. Right? So if this thing were to move up and then roll over, you might be like, let's catch a move to the downside. Certainly. Google finished the job. I would love to say that I held on, and I cannot. I was out and then out. And then it's oh, let's go. Did anybody hold on a piece of Google? If you did, I salute you. Steve says no. No, that would have been a tough one to hold. You're it just couldn't get going, I actually didn't sell on this day. It was this day. So I felt like I held pretty well. Maybe even was this day. I can't remember. No, it was here. I was just no, it's just struggling to. Here I was thinking, all right, we're okay. And then it was down here. It's nah, gotta close. It's done. And then boop, boop. Goldman trying to get back into favor. That's a good start. But now I'm going to wait for the next pullback. Hood. All right, Hood. If it never broke support, if you didn't get picked off on that volatility, hopefully you did not, then this thing is trying to make its move now. There's been some tough moves in volatility, right? I mean, that's kind of the market we're in. What you have to sort of prepare yourself for. It's a little more flexibility. Howmet, overextended. IBM going insane. Intel, I like Intel. I think it's reasonable coming out of a pullback on that. Google's still on my list though. I will say that, but it does have earnings coming up, so be careful there. IWM, still bullish. I'm still going to put it on my list as tradable. Lumentum, yeah, that was one we were looking at. So always curious if anyone was able to get a piece and pick it up before it moved. Anything from the watch list? Meta, still a no for me. Morgan Stanley, I like. Me likes. Microsoft ended up doing okay it's about close to earnings now. It did all right. Micron still definitely looks bullish. Netflix is a no for me. Northrop Grumman, I think, is a yes, but gave quite a bit of sideways and then takes off. So you have a little bit of time. You might wait. You might wait to see if it turns. Nvidia still bullish. Same kind of a thing. Tried, held support, a little bit of volatility, turned, looking good. Now it's got to go. There's no more hiccups. It's now it goes or it closes. But hopefully you still have a piece of that. Bob Rowland said yes. Okay. Me as well. Palantir is a no. Sideways. QQQ looks great. Looks great. Roblox, maybe. But earnings, I'd say no. Reddit, trying to make some sort of comeback, but it's got earnings coming up, so I'm a no there as well. Rocket Lab still looks like it has some possibilities. Put it on the list. Silver, same thing, that big gap down. If this thing breaks, I think Steven said his level is 34.50. Did I nail it? SoFi, it still looks fine, but it's got earnings. I'm going to leave it off the list this week. SPY looks good. Tesla, kind of chopping around sideways. TSM looks fantastic. And I said I would be willing to put both on. You can see it was actually a bullish. It didn't finish. It was kind of a doji candle, but it did turn. And this turned. So I would say this looks all right. Uber was kind of sitting around at 94. UUP. The VIX we already talked about. No, that's Visa. Visa sideways, earnings soon. VIX looks okay. Walmart on the list. Walmart. Now here's the thing. The list is 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 21. I mean, that's a good list. It's not 25 or 30 like we sometimes have. 21. Good list across multiple industries. Quick look at the XLs. Materials kind of veering down. Communication services trying to get back into favor. Energy kind of choppy. Financials trying to move forward. Industrials trying to stay above the 50. Technology looks great. Staples had a pop, but we'll see. Utilities. So that was in one. I'm putting utilities on my list. XLU. Make it 22 stocks. That was one that I was like, ooh, you could have taken that on Friday. Too much institutional demand. Maybe. Press. It could hold and then make another run. Absolutely. Right. It could have I'd have to go see. You know what I'd be curious about is how well AI could do Elliott Wave. It's pretty good stuff if you get it right, but it's its own unique technical analysis. It doesn't play well with other concepts. It's like it's Elliott Wave and nothing else, or not Elliott Wave. But it is an interesting analysis, and it does well in cycles like that, where it's like commodity cycles and things. Anyways, I'd be curious to see a well-taught AI model, how well it would analyze, the waves and the cycles. Anyway. Okay. Lastly, everybody's in. I want to see trading plan conversations. Well, maybe not on this one. Section 1, personal. Strengths and weaknesses. Remember, goals will come from here. Goals will come from here. Commitment and discipline, mission statement, vision statement. This is about motivation. Who's driving the ship? It's about making sure that when things get a little rough, you have good, right? This is whoops, very helpful. I know.
This is a reminder.
Time to water the bonsai. Okay. The Fred's printing machine is starting to rip. Yeah, we do have a couple quarter points coming our way. I think it's pretty well priced in, but I am definitely leaning with Steven. I feel like this is the kind of market where we could see a couple of months of good bullishness without any, artificial headwinds that just come from nowhere. Well, let's just say not from nowhere. Thank you, press. You. Yeah. Well, it's actually two bonsais. One is mine and one is my daughter's. So it was like a Christmas present. We did a bonsai experience together, but then she's like, will you water mine too? And I'm like, yeah. So now it's like my thing that I keep both our bonsais together. 2 years this Christmas, so we're doing pretty well. Ours is a Hawaiian umbrella, I believe is what it is. It's a hardy one that can grow well in a desert like mine here in Utah. But it's pretty cool. Anyway, section 1, you guys, get it done. You have 1 week. We're starting the loop. Everybody's going to have a stronger plan to start 2026. It's good to see everybody. Let's see if we can get a nice bullish open on Monday and a little continuation to Friday's momentum. Our posture definitely is leaning that way. We have some trades leaning that way. Let's see what happens. It's good to see you guys. Have a great rest of your Sunday. And as always, happy trading.